Hello guys, welcome back. This is another live trade recap. This is a trade recap of a trade that I have taken and posted earlier this week. So I'm just going to walk you through exactly what happened and I'm going to break it down. I'm going to basically break down what I saw in real time. And by the way, it's just one example, pulled straight out from my full DOM trading course. The full course includes over 15 trade breakdowns, just like this one. Plus detailed lessons on what to look in every trade, what actually matters on the DOM, and how to read it like a pro. It's also made for both the beginners and the more advanced traders. It's packed with real useful info, and honestly, it's the only course that you will ever need when it comes to trading the DOM, especially when it comes to trading the DOM like me. So if you are really serious about trading the DOM, you can just shoot me a message, you can email me, or you can type down below in the comments and I will DM you the details. Also, if you guys haven't, you can join my Discord, link is in the description, and I'll see you guys there. Hope you guys enjoyed this one. So I really did have a great reason to enter, which are these imbalances in the charts. So I have this indicator that shows me where price moved very fast. So these are tick-based candles, which means that every time price moves very fast in a candle, in a 1 minute candle, it's going to be marked as a color red or as a color green or purple or blue. And what that means is that when price moves too fast, it leaves behind those empty shops, which are basically areas in the chart or areas in the price where no one transacted. As you can see here, for example, on the Nasdaq, you can see how no one transacted here. No one transacted here. You can see there is no sellers. There is no orders that are coming in at these places. And as we said, market makers, banks, hedge funds, everyone who is providing liquidity into the markets needs to earn money, and they earn money by people placing contracts and closing contracts. And you know, when you place a trade, you're gonna have some commissions taken out from your profits, and those commissions goes into the liquidity providers, which are the market makers. And if they notice that price moves up too fast and there are places where no one transacted, it basically means that they're losing money, because as I said, they make money on every transaction. If no one transacted, they're losing money, and they want to come back into those places where no one has transacted, so that some people can transact again, so that they can make money. So that's how we can use and exploit those moves into those empty shops, as I like to call them. So these were those moves where price dropped very fast, and those are the places where I expected price to go to next. And you can see how choppy the price is. So this is the 50 MA again, and we can see how there is no clear direction to where the price will move next, and the only good thing that I had to trade towards was those imbalances left here in the charts. So let's play the clip. Of course, again, we are going to pay attention to the trade confirmations to stay in the trade or to exit the trade. So this time, of course, we profited. We're gonna see how, and we're gonna go over all the trade confirmations that I paid attention to. And yeah, so you can see again that I'm using less size. So why am I using less size? Well, because the market is choppy, there is no direction, there's no clear direction, and anytime price can drop down easily as it can move up as well. So I don't really have edge when it comes to these market moves in these market conditions. So you either don't trade or you just use less size, which I did today or in this trade. So you can notice there is some buying, there is selling, but there isn't that much, there isn't that big bid or the big buy that we're waiting for. You can see they're pulling from the offers, they're pulling from the bids, sorry, they're adding into the offers, which is bearish, so we're gonna expect price to drop down. But I'm using less size, so I'm not really worried if price does move into these areas here. So I'm just being calm and being patient, just waiting for price to move into these imbalances right here. I'm gonna skip the video here because it jumps up and down. And here we can actually see that price dropped down. So I'm gonna rewind the clip. So this would be a good opportunity for you to go short, just because you can see the speed of the move. You can see here it is the big bid that we're talking about, the big bid that can act as a magnet. You can see that it's bigger than the average. You can see the average is around 80 to 90, 70, but this one is 191, which is very big. So price will naturally move towards that big bid to transact. And you can also see that there is much more selling than buying. You can see 3-digit selling, but here you can't see any buying. But I mean, still in the trade. I'm still in the trade because I'm trading the long term. I'm trading with less money, so I can absorb these moves to the downside. Look at that, 300 contracts sold. That's a very big sell. This is where I'm expecting price to go, which is what I was showing in the live trade. So again, we can see a lot of selling, but you can notice that price is not really dropping that much, which is good. But then it drops. So right now what I'm waiting for is, first of all, I'm waiting for these sellers to get trapped. So I was basically waiting for a big sell to occur, but price doesn't move down. So they are not rewarded even though they're selling, which means, as I said, they're being trapped. And also what I'm waiting for are these iceberg orders to come in, these pull and stack columns to match the amount of sells. So that means that they will buy from all those sellers and sellers wouldn't manage to drop down. Then what I need to see is them pulling from the offers, which we know means that they want to sell higher and price will move up. We want to see 3-digit buying instead of selling. We need to see more bids right here than the offers. So those are the clues that we are waiting for that will tell us here it's going to go up. So I'm going to speed up the clip now to the point where we reverse to the upside. Notice the amount of buying. Look at the buying. Much more than the selling. And we are at the lows of the range. Look at the bids. Look at how much bids there is compared to the offers. They're buying from all those sell contracts. Look at the bids coming in. I mean, there is still more offers, to be fair. There's still more offers than the bids. But you have to remember that this move to the downside was very quick. And even though we're dropping, the bids are still coming in, which is good. They're buying from the sellers. And then you see that fast pull up. Did you see how fast the move on the Nasdaq happened? And because we know that they are positively correlated, if one asset moves, the other will follow. So notice the speed of the Nasdaq. Just watch. Boom, there it is. So that's a really good sign, really good confirmation for you to stay in the trade. So now you can see how the book changed. Notice how there is not now more buying than selling. Notice the buyers compared to sellers. There is much more buying. Notice that there is bids coming in. Notice that there is no offers trying to sell into the buyers. So they will easily move up. Here on the power meters, you can notice that there is much more buying than selling. Look at the blue. It's above the line. Did you see a drop? This is very important. Focus on the Nasdaq. I'm going to slow this down. Focus on how it drops down, but then how quickly it moves up as well. Do you see that fast drop? But now watch how quickly it moves up. Do you see the jump? Jumps again. That is what you want to see. You want to see those quick pushes up. There's the move up again. So you can see how they retrace that whole move that happened to the downside just as quickly. And there's the move up again. Moves down again to our entry. This is where we expect it to move up again. Now that's a very fast drop, but there's nothing to worry about since we are using less size, as I said. Notice these sellers getting trapped. Do you see how fast they moved up again? From the same place as before. So a big player is here, holding this range. Do you see that drops down, quickly comes up? Notice how now there is more bids than the offers. Do you see that? So now there is more bids waiting to buy than there is offers waiting to sell. So it's going to be easier for us to move up. So that's a clue. That's a change that something is happening. A reverse is occurring. Offers are trying their best to hold the place, to not let price move up until they can't. Just pay attention to these orders right here, these market orders. And another very important thing is that you can notice that right here on the delta, you can see that there is more red, which means there is more selling, but you can see that they are not being rewarded. You can see that there wasn't a move down. They can't bring it down. You can see bids are coming in, they're happy to buy. You can see a lot more buying. Look at that, three-digit buying. You can see pulling from the offers, adding into the bids. So everything is weighing to the side that it will push up. Drops down, quickly pushes up. So right now, all that we are looking for is those fast pushes up. We are looking for three-digit buying, pulling from the offers. And there's the move on the Nasdaq. S&P follows as well. Look at buying compared to selling. There is no one selling. There is clear interest from the buyers. They want these zones. They're ready to move up. You can also see offers being stacked here, which are going to act as magnet zones, 120, 113. You can see how they move to those offers to transact. Look at the profits on the Nasdaq. Again, notice the buying. Look at the buying compared to selling. So you can see how controlled this move to the upside is. 278. Then of course you're going to expect a pullback to occur. So there's the pullback. But now what you want to see is again bids coming in, buyers in the three-digit. Moves up again. There is no selling here, look. So this is where I notice this 121 on the offer, which I'm gonna trade towards. So that's a trade confirmation to stay in the trade. Look at Nasdaq moving up. Look at how aggressive it is. Again, buying coming in. Notice the buyers. This is where I noticed that very fast sharp drop down, and this is the point where I looked to close the trade. I'm gonna skip a video a bit. Again, notice the buying. Much more buying than selling. Offers being stacked, which we can trade towards. So I'm gonna speed up the video now. It's basically the same thing happening over and over again. They just jump up and down. And then I'm gonna see that fast drop down, which is a clue for me to get out. Another push up. And now you can notice that there isn't that much buying happening as price is moving up, so that's a good clue for me to get out. $225 comes in, $232, $245. So you can see how much buying is happening at the highs. Nasdaq is still pushing up. And this is where I'm looking to get out. You can notice no buying occurring. You see that fast drop down, so that's a clue for me to get out from the trade. $108 on the sell, and there's that fast drop down on the S&P, so that's a good clue to get out from the trade. The thing that we paid the most attention to was, of course, the market orders. Did you see that change when we were down here, how there was much more selling compared to buying? But then we saw that quick switch where actually there was more buying than selling, and then you saw that move up. Then we saw those offers being stacked at the highs, which can act as a magnet. We saw those fast pushes up on the Nasdaq, and yeah, we held the trade. Look at the difference now when we are up here. No one is buying, no one is selling, no one is selling, no one is selling. You can see that it's just buys.